OpenAI, the company behind the artificial intelligence chatbot ChatGPT, has filed paperwork to go public on the US stock market. The planned IPO, that's initial public offering, sets up a battle with competitors Anthropic and SpaceX for dominance in the AI sector. Investors expect the company's debut on Wall Street to be one of the most highly valued listings in history.
Just 4 years after launching ChatGPT, its parent company OpenAI is targeting a valuation of up to $1 trillion in a stock market debut. Its chief executive, Sam Altman, has revealed just a few figures so far. He says OpenAI is generating around $2 billion in monthly revenue and growing at a pace that far exceeds many of the internet giants that came before it, including Google parent Alphabet and Meta, the owner of Facebook. The growth, however, comes at a cost. OpenAI is spending heavily on data centers, computing power, and the training of AI models. This year, the company expects to lose $14 billion, one motivation for raising funds on public markets. But profitability is still a ways off, 2030 at the earliest, the company says. Investors' appetite for AI stocks is paving the way for major stock market debuts, not only by OpenAI, but also its biggest competitor Anthropic, the company behind the Claude chatbot, which announced its IPO just a week ago. Another rival, Elon Musk's SpaceX, which merged with the artificial intelligence company xAI, is also slated to go public imminently. All of them could be valued around $1 trillion each, or even more. For now, enthusiasm around artificial intelligence shows little signs of fading, despite warnings of a bubble. Once these companies face the scrutiny of public markets, investors will demand more than ambitious promises. The challenge will be convincing them that the AI revolution can deliver profits on a scale to match the extraordinary expectations.
Well, Ian Bremmer is president of the leading political risk consultancy Eurasia Group. He's written that politically unconstrained AI development is a key force shaping the world. So I asked him what he meant by that.
Well, AI companies, the hyperscalers in the United States, are essentially acting as sovereigns, at least in the digital space, which increasingly means influence over national security and economic decision-making, and even how people think of themselves and interact and are members of society. And when they're self-governing with that kind of influence, it really does change how you think about geopolitics. The IPOs are certainly not going to constrain them in any way. I mean, you could argue that it forces them to focus more on profitability. But to be clear, they've been focused overwhelmingly on raising money in the markets irrespective, and also competing with each other and the Chinese at utterly breakneck speed with the highest possible stakes. So I don't think the IPOs are going to particularly change that.
Right, so you don't think that being regulated in this way, as they must become, if this IPO happens, you don't think that changes anything?
Well, I mean, certainly it means that they have to spend time every quarter on, sort of putting their numbers together and reporting those in ways that are useful. They also have fiduciary responsibility to shareholders, which they didn't have to that degree before. So again, in principle, that means that they're going to have to focus more on profitability as opposed to other components of mission direction that we saw in the early days with OpenAI, for example. It's very different. But in terms of whether I believe that becoming a public company is suddenly going to constrain with a regulatory environment what AI companies are doing and the impact they're having on the global environment or just on the domestic political environment, the answer is no, I don't.
Right, so let's explore that a bit, because as you say, these are American AI giants, no serious European competitors. So talk us through some of the risks that you believe that sort of dependency leaves Europe open to.
Well, look, I think it's less about the dependency of Europe. I don't actually believe that there's such vulnerability that the Europeans would suddenly have the Americans shut down access because they did something that they don't like. I know that that's been the concern, this idea of a kill switch, whether it's for a Lockheed jet or whether it's for an LLM and a foundational model. The reality is that the Europeans have the world's largest common market. Companies want access to that market. The American government recognizes the Europeans have leverage in the trade relationship, irrespective of how unpredictable and undependable the United States has become in European eyes over the last couple of years. So I think the risk is less for Europe per se than it is for everyone. I mean, for example, there's a big risk for the Russians. They've just seen their national security environment get completely transformed because Elon Musk decided to shut off Starlink for Russia. And as a consequence, the Ukrainians are now arguably winning the war that they were losing before he did that. That's a serious problem that in principle could happen anywhere in the world. You saw that Mythos, when Anthropic created this new LLM, profoundly powerful, that they unilaterally decided not to put on the market because they recognized that you could use it to find any bug and exploit any piece of software that involves critical infrastructure for the world, whether it's military, whether it's banking, whether it's a power grid or it's a water system. And so, I mean, the issue is less about Europe doesn't have these. The issue is that none of the governments have these, even the US government. The reality is it's the companies that are actually doing the creation, the rollout, and the determination of what it is that these AI models actually do.
And so when the trillions are spent on these IPOs for these companies, what do you think happens in China as the biggest sort of global competitor to this? What do the Chinese make of this going to market, especially as all these three companies seem to be doing it at the same time?
Well, the stakes are higher. And of course, you know, one of these is SpaceX. And here, I mean, the Americans through the private sector really do have a very significant advantage over the Chinese in rocketry, in space, and the surveillance that comes from that, and perhaps the disruptive capabilities in national security. So the Chinese feel like they need to redouble their efforts, and those are largely governmental efforts. In the case of AI, first, China really has a fast follower model. DeepSeek is an open source AI. It's a lot cheaper in terms of the tokens than buying them from the US. And a lot of people, including American companies, European companies, are exploiting that. But so much of what the Chinese are trying to do in AI is not about consumer use. It's really focused on applications for industry and defense. And there, China's advantages are much more about cheap energy at scale, not about the chips and not about the most advanced LLMs. And they think that that's a model that ultimately will be useful for them. But very clearly, when it's trillions of dollars that are going into this architecture in the United States and in other countries that are providing support for those companies, the Chinese are going to see the stakes are higher. They're going to need to spend more, notwithstanding everything I just said.
And what should we make of the fact that OpenAI, Anthropic, and SpaceX are all doing this at the same time?
Well, it's not as if they're coordinating, but they are taking advantage of a level of extraordinary market enthusiasm. And so as a consequence, you know, one succeeds. Well, it's the same level of big problems with Iran, big problems with global supply chain, but the markets are still going gangbusters. Why? Because everyone truly believes in the AI story and in all of the infrastructure that is supporting that story. And so these are going to be, I suspect, extremely successful IPOs playing into that perspective.
Good talking to you. Thanks for joining us. Ian Bremmer from Eurasia Group.
My pleasure.
Let's take this up now with Dennis Dick. He's Chief Market Strategist at the Stock Trader Network. Dennis, can these companies actually deliver profits to match their trillion-dollar valuations?
I think profits are a ways out, but the question is, can they deliver the growth rate that investors are going to want to be able to pay $2 trillion for SpaceX, $1 trillion for Anthropic, $1 trillion for OpenAI. As long as they're showing revenue growth, investors will want to buy these stocks. I mean, we can look back to Amazon in the early 2010, 2011, wasn't showing a lot of profits, trading 150 times earnings, but they were showing huge growth in sales. So as long as these companies continue to show growth in sales via new contracts, obviously via users, I think investors will still buy these stocks.
OpenAI, Anthropic, Elon Musk's SpaceX, which also has a major AI business, they're all going public at the same time. Why now and why all at once?
Strike when the iron's hot. I mean, these AI markets we've seen the last 2 months since the April lows. What has driven the stock market higher is all the AI stocks. Micron up 300% in the last few months. AMD up 200% in the last few months. SanDisk up over 1,000% in the last year. These are incredible moves. There's not a better time for these companies to go public than when AI stocks are exploding higher. Now, don't look at the markets today because AI stocks are getting hit. Funny we do this segment. AI stocks are getting hit pretty hard here today. But the run up here has been pretty incredible. So do we think it's over? I don't think it's over because we've had such a run here. This probably is a little bit of profit taking, maybe a little bit of like investors nervous ahead of these big IPOs. But you strike when the iron's hot, and AI is really hot in the stock market.
Well, some say too hot. This is the first time these companies will have to disclose their financials. As an analyst, what are you looking at most closely when the numbers do come out?
I mean, you can break down, and obviously we've only seen the S1 for SpaceX, but it's interesting, even breaking into the SpaceX, that in that disclosure, we saw a contract with SpaceX and Anthropic. So you can look and say, okay, SpaceX had $18 billion in sales in 2025. So that seems 100 times sales. Well, in the S1 disclosure, there was a contract with Anthropic for $1.5 billion a month, which is $15 billion in sales a year. So if that contract, which is a monthly contract, stays, all of a sudden an S1 disclosure shows you that they could double their revenue just this year, just from the Anthropic contract. That's, one thing, you look for when you're looking in these filings. Is there anything else, that we look for? Yeah, I mean, the structure of the shares, you can look, is there dual class? Is there voting? You can look at different things. But when you have a contract, that's just hidden in an S1 disclosure like that, that's that large, these are things that are, going to drive the stock price higher as well. So, I mean, going forward, it's not going to be about profits. It's going to be about what the next contract is. We've seen even with stocks like Micron, stocks that are trading publicly right now, the AI stocks, when they get a new contract, I mean, Corning got one just 2 days ago. The stocks pop 5 to 10% on these contracts because they're big, especially when they're coming from companies like Amazon. So it's going to be about that going forward. It's about getting these contracts. And again, Anthropic and OpenAI are going to be competing for those contracts as well. So, you could ask, is there a place, for a $1 trillion Anthropic, a place for a $1 trillion OpenAI? I think if AI turns into what, many believe it is, that the valuations may not be as extreme as we think they are.
There's so many questions surrounding this. What do you think? Will these IPOs change how fast and in what direction that the AI giants develop?
Well, obviously, when you're not profitable, you need funding. And I mean, one way to do that, come to the public markets here, because these companies are all in cash burn situations. So it's a good time to come public. Does, coming public and getting the public money help? For sure, when you're in a cash burn situation. Can these companies get profitable? I mean, we're talking OpenAI 2030. I think they have a path to profitability here. And I think this, obviously going public now, bridges that gap from where these companies are growing revenue at this point in time till they actually do become profitable 4 or 5 years from now. Maybe profitability can come sooner if AI continues to explode. I mean, you just look at Anthropic's revenues exploding. Obviously, many people using Claude. That's been the talk of the last 3 months here. Obviously, even us over at Stock Trader Network are using Claude to build different apps, stock market apps. So I mean, there is use cases for all of this technology. It's a matter of how fast and how quickly people adopt to it.
Many people are concerned about AI for different reasons, but some are warning of a huge bubble in the stock market that's being driven by these tech giants. What if there is a bubble and it bursts? What's at stake here?
I'm not sure if it's not bursting in front of our eyes here right now, which is funny because we had the NASDAQ, it's down about 3-4% here just in the last couple of hours here. Like we're just seem to be going down. But again, what we see is, stocks go up, they go down. What if, we're like 1999, I think you're asking, where you had the internet bubble, 95, 96, 97, 98. NASDAQ goes to 5,000. And then in 2001 crashes down 80%. Do I think that's going to happen today? I think it was different back in 1999 because 1999 stocks were trading at a lot higher valuation. You actually have this driven by earnings. I mean, Micron earnings are continuing to go increase. NVIDIA's earnings are increasing exponentially. And that's really where the valuations come into play. Back in 1999, many stocks trading 80 times earnings, 100 times earnings. Now, we're not talking SpaceX and OpenAI, but when you look at NVIDIA's price to earnings, 20 times earnings. You look at Micron, 9 times earnings. You look at Dell on a forward basis, 25 times earnings. We're not in 1999 where we got companies trading 100 times earnings here. Now, the question is there eventually, a lot of pull forward, where maybe some spending goes down for some of these companies and then obviously the earnings would contract? That's a possibility here. But this run in tech stocks has actually been driven by earnings, which is much different than 1999.
Dennis, thank you so much. That was Dennis Dick, Chief Market Strategist at the Stock Trader Network.
Thanks for having me.